Welcome to the Personal Finance Podcast for Doctors. This podcast aims to simplify all aspects of personal finance and helps you make smart and informed choices about money so that you can live happier and stress-free lives. Today's episode is brought to you by Chanda, who is a financial coach with the doctor practice at MFA, the only company in India having a dedicated practice for doctors.
Hi everyone, wishing you the best for the joyous season coming next week. So Merry Christmas to all of you. Anyways, in today's podcast, what are we talking about? Well, we are talking about yesterday's headlines. Yesterday, the headline screamed, Nifty is below 24,000. Sensex is 964 points down. Of course, the US Federal Reserve projected fewer interest rate reductions in 2025. This will affect investor sentiments. It raised concerns about potential outflows from foreign investors, and therefore the market corrected a bit. Because if you look beyond the absolute figures, this dip was about 1%. So hello, when I put this in perspective, okay, Nifty 50 touched 24,000 level sometime in July this year. Since then, there have been ups and downs. It fell below 25,000 mark in August as well. And almost the whole of November went below 24,000, most of it. And now in December, it's back up. But now it's temporarily down again. So what's the big deal? Why is this headline focusing on saying it's a crash? A 1% dip is not a crash, it's a dip. Now, every stock market investor knows that it is normal for the market to experience a temporary decline. And every year, yes, you heard it, every year, it's normal. This is how growth happens. Then why are we so surprised, shocked, when there is a normal decline which is occurring? See, the stock market is not a shock market, but we all treat it as that. Every dip, every decline, every fluctuation, it's met with surprise, worry or panic, especially all these news channels. But here's the truth. The market is unpredictable, but in many ways, it is incredibly predictable. It is not predictable in the sense that you can forecast what it will do tomorrow, next week or next month. No, you can't. But it is predictable in the sense that its behavior over time follows a rhythm, a pattern that repeats itself. So the stock market is predictable because it will never go up in a straight line. It will rise, it will fall, it will move sideways, but it never moves in one direction forever. That's its nature. Markets breathe just like we do. They expand, they contract, they grow, they correct. And these movements are not anomalies. They are the features of the stock market. They are what make the market what it is. And once we understand this, we can be prepared for it. We embrace it instead of fearing it. This is up and down is a part of the process. This is how wealth is built over time. Do we ever expect the ocean to have waves which only rise, never fall? No, it's unnatural. It's impossible. So the real insight here in this podcast is that while market's short-term movements are unpredictable, its long-term trajectory is usually upwards. And history has shown us this, that declines are temporary. They are pauses, they are not endings. But advances, on the other hand, they are permanent. They represent the growth of businesses, of economy, of innovation. They reflect human progress, which despite setbacks is relentless. Yes, short-term negative events affect market, 5 to 10% definitely. But even if you remember the big crashes like in 2008 which happened, or the COVID crash, it was all temporary, about a year. And since then, how have we grown? So why then you investors panic? Because we forget this predictability. We get caught up in the moment. We listen to headlines that scream doom and gloom. We see red numbers and the fear clouds our judgment. we start to believe that this decline that we are experiencing, it's different. But this thinking is flawed. The market always recovers. Not because of luck, because of its design. The stock market is a collection of businesses. Businesses are built to grow. They innovate, they adapt, they will find ways to create value. That is why the market has always trended upward over the long term. Understanding this predictability changes the way you invest. It can keep you focused on the big picture rather than the daily noise we hear. So now look at these declines as natural, guys. They are like sales at your favorite store. You will go and buy more when the market is declining. Yet instead of seeing them as chances to invest wisely, many investors wait in fear. Patience. But patience is hard. It requires faith in future. It requires discipline to tune out the noise and stick to your plan. It requires the discipline not to get worried about day-to-day and month-to-month movements. Investing is not about avoiding declines. It's about being patient with them. The stock market rewards those who can embrace its nature, those who are willing to stay patient when others are panicking, those who understand that volatility is a feature which is beautiful, not a flaw. So stock market is not a shock market. It's a growth market. It's a market which reflects progress. If you stay focused on this aspect, you'll understand that the temporary is just that, temporary. And the permanent is worth waiting for. And if you want to succeed, doctors, as investors, this mindset is absolutely important. I hope that made a lot of sense to you. A very Merry Christmas to all of you again, and have a very, very happy and a blessed New Year. Thank you.
You were listening to the Personal Finance Podcast for Doctors with Chanda Verma. If you find this podcast relevant and interesting, do share it with other doctors as well. It will be great if you leave a review, share, like and subscribe. You could also let us know if there is any specific topic that you would like us to cover. For any queries or help, you can get in touch with MFA's Doctor Practice Team at 892-800-6140.